Well, thank you so much for being here, everyone. It's great to be bringing this type of content with you. My name is Jess. I am the CEO of QENDO, and I'm here with Andrew, who will be talking through personal risk life insurance and endometriosis, the 101 on life, disability, and trauma covers. I, on behalf of QENDO, would also like to acknowledge the traditional lands on where we are all meeting here today, and acknowledge that for thousands of years, our First Nations communities have come together to discuss and learn and share. And so we learn so much from them and what they have done for decades and years and years and years. And we replicate in a different and more modern version of those discussions here. So if you are online, please do add some questions. Andrew has very kindly offered to answer some questions where possible. If not, we can always take them offline. And feel free to chat in the chat. Ash is online as well, who will be letting me know of any questions for us to answer. This is not an open mic webinar, but it is recorded so that we can absolutely share within our library and share the information with other people. So you are welcome to be named anonymous, and if that is what you would prefer, please do so by changing your name, or all questions will also be noted as anonymous. Thank you again, Andrew, so much for coming and sharing this content with us. It's one that we hear about all the time. It's a question that I'm asked often. And as someone who lives with endo, I have been through the process of trying to work out what in the world I look at in this space. So yes, thank you so much, and over to you.
Oh, well, thank you so much for that lovely introduction. And it's a pleasure to come along and share some of my knowledge and experience with the QENDO community. So as Jess mentioned, we're going to go through the personal insurance 101 around life, disability, trauma covers and how they impact endometriosis. Just on background, so look, life risk insurance products, broadly speaking, are quite a cost-effective way to provide people with protection against life's unexpected events. So temporary or permanent disability, a major critical illness or trauma, those terms will be used a little bit interchangeably tonight, or even terminal illness and premature death. So insurance for these events provides either a lump sum or an income stream to help you and those close to you through these events financially. So they impact everyone differently, but often they'll impact your ability to earn an income or to provide for yourself and others. And shortly we'll jump into the four main types of insurance. But before we do that, I'll just go through a couple of formalities compliance-wise. So I'm a licensed financial planner, and a lawyer. So excuse the lengthy disclaimer, but it is important. So aside from any medical comments that are made tonight, obviously you've always got to go and speak to your doctor and treating health professional around those matters. But in relation to any of the financial, tax or legal content, it's general only in nature and not to be construed as personal advice to you or your family. The document and this presentation, it'll contain general information around the strategies and benefits, costs and risks associated with different classes of financial products. I recommend the ASIC Money Smart website for good general content on financial services products, including life insurance. But obviously, if you've got your own personal questions, it's important to get advice. So a little bit about myself and my background. I'm the Managing Director of Protect and Govern, which is a bespoke financial planning practice that focuses on life risk insurance and the triage of estate planning and business succession type matters. I've got 16 years experience for my sins doing this type of work, but I'm very passionate about it, and I do love helping people protect themselves and their families. I also practice a couple of days a week as a solicitor. So I was only admitted as a lawyer in September of this year. I've been a financial planner for a lot longer, so 16 odd years. Again, for my sins, hold a master's degree in taxation and financial planning, a Bachelor of Laws and Economics. I'm also, in terms of endometriosis, I'm a part-time research candidate at the Nickham Health Research Institute at Western Sydney University. and my supervisors are Associate Professor Mike Armour and Justin Sinclair. So two very senior researchers in the cannabinoid medicine space as it pertains to endometriosis and chronic pelvic pain. Coming back to my role professionally, I've sadly been involved in a lot of claims, so about 15 odd million over the last six years or so across disability, trauma, and income protection insurance in particular. Fortunately, not too many death or terminal illness claims, but they do come. All right. Let's jump into the real content of why we're here tonight. So look, I think we'll start on the basics of the 101 of what these covers are. So look, there are 4 primary life risk insurance products that we'll talk through. Life insurance, which pays a lump sum when you pass away or you're deemed to be terminally ill. So typically, and that depends on the contract and also potentially the superannuation trust deed, usually you can claim your terminal illness or your life insurance early. So if you've got 12 to 24 months to live is generally the time frame. So that's life insurance. You can own many of these policies in your own name, joint names, in a company, in a trust. Most commonly, though, you'll see that you self-own your insurance, or you'll have some of these covers through a superannuation fund. The next type of policy is total and permanent disability, or you'll hear about it being referred to as TPD. So that pays a lump sum to typically to help with rehabilitation, nursing, living costs, and debt reduction. And it's usually triggered by permanent inability to work in your own or any occupation. The loss of limbs, sight, or hearing, or typically a combination of those. Loss of cognition, and or the inability to do the activities of daily living. The third type of cover, and this is there's lump sum insurance and income type insurance. Pardon me. The third type is what we call critical illness insurance or trauma insurance, and it pays a lump sum if you're diagnosed or treated for major critical illnesses. So most modern retail contracts in Australia typically cover about 40 odd different critical condition triggers. And then some will cover partial benefits. And we'll talk shortly about, there are some contracts that do cover endometriosis as a partial trauma benefit. I'd like to see more. There's only 3 of about 9 retail insurers that do overtly pay out on endometriosis, but when I started my master's, it was only at 1. So we've built that up to 3, and I'd love to see more in the industry cover the condition. The final cover we talk a little bit about is income protection insurance, and it is a type of policy that will pay you a monthly benefit if you can't work due to temporary sickness or injury, or permanent. But typically it's designed for temporary replacement of income. Income protection is subject to what's called a waiting period, which is how long you've got to wait before you're eligible to actually start receiving benefits. And so the longer you can wait within that waiting period, so typically 30, 60, 90 days, sometimes 180 days, a year or 2 years waiting period, the longer you can wait, the cheaper the premium. So it operates a little bit like an excess on a car or home insurance policy. And then the other key factor, apart from that waiting period and the monthly benefit, which is typically up to, about 75%. Some products will be 70%, some will go up to 87.5% of your pre-disability income. And so it'll pay you a replacement income for what's called a benefit period. And so that's the other, sum insured monthly benefit, waiting period, and then your benefit period is how long the benefit is paid. Typically, we'll see in the market about 2-year benefit periods, 5-year benefit periods, sometimes out to age 60, age 65, or even age 70, in terms of, and obviously the longer the benefit period, the higher the premium as well, because if you take, your current age and then think about how many years that is out to age 65 or 70, that's, and how long they're replacing that benefit for on a monthly basis over many, many years, that actually comes up quite a big sum. And so I often say to people, your ability to earn an income is one of your biggest assets. We don't think twice about insuring our car or home, but often we can't have those things in life if we haven't protected our ability to earn an income. So income protection is one of the most important insurances that you can have. Um, so who issues these insurances in Australia and how are they accessed? So life insurance covers are super highly regulated. They're issued by licensed life insurers, friendly societies, and reinsurers. And they're governed by, amongst other legislation, the Corporations Act, Life Insurance Act, and the Insurance Contracts Act. They can be originated and owned, like I said, different ownership, individuals, joint lives, companies, trusts. But there are three ways that people will typically be able to access life insurance. So the first one is what's called group insurance. Group insurance are policies taken out by those giant big superannuation funds like your industry funds on the whole pool of the membership of the fund, or an employer can often take out what's called a group insurance policy. And the benefit of that is often you will be the beneficiary of what's called automatic acceptance. So group insurance has a really important role to play because it can, upon entry, you can be granted cover without necessarily needing to go through medical and underwriting. So, sometimes that's an element of a lottery. You go to an employer, you choose an employer on the basis of a multitude of factors, not necessarily their ability to provide insurance benefits, but sometimes that can come, they can come as part of your package. So we do see it a lot in professional services. So architects, lawyers, accountants will often provide group insurance. But part of the advocacy element here is, look, if you are in senior roles or you've got elements of influence in HR and finance, well, talking to your employers about obtaining group insurance on the whole pool can be, or the whole pool of staff can be really beneficial, because your whole workplace community can then be protected with these valuable covers. So group insurance typically is only really for death, TPD, and income protection. There's no group insurance for trauma, sadly. The next type of way you can access this cover is what's called retail insurance. So this is typically placed via a licensed financial planner like myself, either via providing what's called general or personal financial advice, which is where the advice in the latter, it's tailored to you individually based on your health and financial circumstances, but it's also medically and financially underwritten, which is a fancy way of saying you are assessed. So they'll look at your individual circumstances and they'll price it and offer terms based on your overall history and your overall risk in terms of how you present to them as an applicant. The other channel through which you can obtain cover or access cover is what's called the so-called direct channel, which is where you as a consumer can purchase coverage either via the phone or an internet portal, but that's without general or personal advice, and you're self-directed in the manner in which you obtain the cover. Retail covers are generally the highest quality in terms of the definitions and the comprehensiveness of the cover. Advisors like myself can often compare the whole market for you, so we can look at and compare, all 9 retail providers that are on the market. We can also then compare those terms and conditions against any existing group insurance you might hold through a workplace super fund or a workplace cover arrangement. And my general comment is that, look, group insurance through super or through an employer, they'll often provide a really good baseline level of cover. And then really, if you want something that's bespoke and designed for you, go and seek advice around obtaining retail cover. But in any circumstances, it's just really important to read and understand your terms and conditions. And generally speaking, be cautious about buying direct via the phone or internet, particularly if the provider can only sell their own products, because there's a risk of bias, obviously, towards trying to sell their own products. But also some of those direct policies and some group insurance policies will have pre-existing conditions. So there's a few little things to just keep an eye out for. In terms of other content we're talking through today, which is around just working through these themes, premium structures, your age, and indexation. Let's briefly talk a little bit about those. So look, there are, within superannuation, you'll typically have unitized cover, but most often premium structures are either what's called stepped premiums, which go up as you get older, and they're based on your age. Okay. So all else being equal, as we get older, we tend to pick up more ailments and, closer to death, as they say. So the risk of a claim on a policy as you get older, whether it's for death, disability, trauma, or income protection, it goes up. And so the insurer rate increases their premiums as you get older. The other contrasting type of premium model compared to stepped is what's called level premiums. Level premiums, you lock in or anchor your age-based rate at inception. Okay, it doesn't mean that the premium is guaranteed, but what happens with level premiums, you tend to have a bit more of a smoother upward sloping journey. Stepped, you tend to have quite significant increases, particularly in the latter years of your policy, 50s and 60s, and that's often the time when you're most likely to claim. So there's that tension between affordability and then, just as when you're, potentially going to need to claim on the cover, you're at the situation where you might need to get rid of it because it's just becoming prohibitively expensive. So that's the risk with step premiums. Level premiums, you pay more early on in the early years of the policy for a smoother journey into your 50s and 60s, but you still don't have the guarantee of those rates not changing. So life insurers do have a right to alter their premium rates. So yeah, stepped and level premiums are your two different premium structures we see the most often. And that's your age is a big influencer on either premium structure. The other key thing I tend to advise people to look out for is when you get your renewals every year, you'll get offered some a renewal rate that'll typically include some indexation or CPI. So your sum insured, or the amount of cover that you were covered for the previous year, you'll be offered a small additional portion based on trying to preserve the spending power of that sum insured if a claim arose. And so that's where they offer you indexation, and you can either accept or reject that. So don't just, look at that renewal and throw it in the bin or delete it as in your email inbox. It's important you read it, consider it, and work out whether you want to decline that offer of indexation or accept it. Okay, and that's ultimately, it just depends on your personal circumstances. But when it comes to premiums and premium calculations, it's really important to understand that your premiums are typically calculated on your age, your sex assigned at birth, your occupation, and smoker status, and typically smoke tobacco, as well as the level and types of cover that you hold, and other factors depending on how you source the cover. So depends on whether it's group insurance, retail, or direct, right? So there's a multitude of factors that'll go into the different types of policies that exist in the market and what you do or don't have. Okay. So keep all of those factors in mind. Probably the only other thing I'd highlight at the outset is that, endometriosis, it can manifest genuinely as a disability, and people don't recognize that. But when it comes then to the law around life insurance, life insurers are afforded a particular type of an exemption under discrimination law. So they have a right where they have actuarial or statistical data, and it's reasonable in the circumstances. They can actually discriminate against people. Okay, so they are legally entitled to do that, but they have to have a reasonable basis to do so. And that can come as a bit of an affront to patients and insureds generally out in the community. But that's around a sustainability aspect. So the whole concept of insurance is we all pool contributions into the premium pool. Hopefully the insured event doesn't occur, but in the event that it does, the insurer responds with a payout. Now, if they accept everyone into the premium pool without any type of checks and balances around history, well, there's a real moral hazard risk that those that present with a much higher risk of a payout will all load up into the policies, claim, and then everyone's premiums become unsustainable and the whole insurance model breaks down. So, that's why the different channels around access of cover, group insurance, retail cover, direct cover, all do play a role. But when it comes to underwriting and assessments and the ability to discriminate, fortunately or unfortunately, insurers have got quite a high level of power to be able to exercise discretion and decisions around how you present as a risk, in inverted commas, right? So, big caveat with this space. So, look, so what do these covers do? Look, the primary purpose of a lot of these is really to have uh, a cash cushion in the event of death, disability, trauma, or income to help meet the costs, for the lump sum type covers, funeral costs, palliative care or medical bills, might be needing to pay down home loans or investment debts or other liabilities, fund kids' education or domestic costs, replace foregone income that a spouse that's departed might have otherwise brought into the family, right? So the other thing you can do is make quite specific estate bequests or gifts to beneficiaries. Okay. Couple of things to be aware of with life insurance. Typically, you've got a 13-month exclusion for suicide. However, after 13 months, most of the time that's not restricted. But some other lower cost or default group cover arrangements might have other exclusions for life cover, like acts of war or engaging in criminal activity. So that's why it always comes back to reading your contract and understanding the terms and conditions. When it comes to TPD, very similar to the purpose in terms of what it's designed to help you with. It's a lump sum cover, help you with debts, help you with nursing and in-home care, fund the kids' education, replace income, might need to modify the home or car if you're in a wheelchair or you need disablement help. Couple of things with TPD, very important to understand. And this relates to the next point around insurance held within superannuation. There are two key different work-based disablement tests with TPD cover. One is Andrew Proudfoot totally and permanently disabled to the point he can't return to work in any occupation by which he's reasonably qualified for by skill, education, and experience? And that policy, any occupation TPD, aligns with what's called the superannuation permanent incapacity condition of release. So when you own cover, TPD cover through superannuation, you got three people that are involved in the contract. You've got the life insurer, you got the super fund trustee, and then you got yourself as the life insured. So if you put a claim in, technically you're asking the trustee to go and claim with the life insurer, recoup the funds, and then there's an additional test in order to be able to get that money out of superannuation, which is called permanent incapacity. There's a few different strands of law running in the background there, right? So it's one thing to get you any occupation TPD payout, but you then got to meet the permanent incapacity condition of release to get it out. Often that's fairly, consistent. There can be some important tax outcomes getting, a couple of doctors to certify that you do meet the permanent incapacity condition of release, gives you a couple of extra tax benefits around the lump sum payout on the way out. The other TPD definition is what's called own occupation TPD, and I often recommend this for a lot of professionals in the medical field, neurosurgeons and whatnot, that need fine motor skills in order to be able to practice in their profession. But look, own occupation TPD isn't just about for surgeons, it's about for everyone where you can get it. So what it does, it looks at your own occupation. So you can't have this type of cover held through a super fund because the definition doesn't match with that permanent incapacity condition of release. So what the test is with own occupation TPD is Andrew Proudfoot totally and permanently disabled to the point he can't return to work in his own occupation, not any occupation, which is a little bit broader. They'd be looking back, with any occupation, they can look back through your whole work history. They've got to act reasonably, though, in ascertaining whether you meet the threshold for the payout. But suffice to say, If own occupation TPD is available and you've got the cash flow to be able to fund it outside superannuation, it's certainly worth considering. Okay. Again, some of these policies will have exclusions. Read the product disclosure statement, read your policy document from the product issuer, and just understand whether there are any pre-existing condition exclusions. Or if you happen to go for retail cover or any of the covers and you're medically underwritten, and yes, they accept your cover, but they offer it with an exclusion, just understand the parameters of that exclusion. It's not all doom and gloom if you do get offered cover with exclusions. Pardon me, it's just around managing it and periodically checking back in to see if you can have that exclusion removed or reviewed, or maybe you can shop around. The third kind of cover we'll talk about briefly, trauma insurance, is again a lump sum payout, and it's designed to cover really your medical rehabilitation costs, diagnosis, treatment, recovery, 40 odd different critical conditions I mentioned earlier. So probably the key difference to TPD insurance is it doesn't cover your back or mental health, and there's no work test, right? So it's simply, have you been diagnosed with the condition or had the treatment option that triggers the payout? Okay. This type of cover can't be held within superannuation anymore. It used to be able to, but again, to meet a condition of release and get the money out of super, trauma insurance definitions don't necessarily align with it. So you have to have that cover outside of super and pay for it from cash flow. I've already talked through income protection in a bit of detail around the types of, terms and conditions you typically see. So your monthly benefit to replace your income, waiting period, benefit period are your key elements there. Probably the key thing to keep an eye out for, though, is the monthly benefit on renewal and making sure that the monthly sum insured reflects what you'd be able to claim on in the event of a claim. So contracts, new business contracts these days that are issued are what's called indemnity contracts, which means you've got to show proof of income at the time of claim. And you want to try to make sure that that monthly benefit reflects the maximum, either that you're entitled to, or that once you take out tax, the net amount in your hand is going to be sufficient to cover your core needs. The monthly household expenses that might include debt payments and, running the household. So, there are older policies where you have what's called agreed value contracts, where you might show evidence of income when you take out the policy, and the insurer pre-agrees to pay that to you in the event of a claim. However, those policies are no longer available for new business, and everything's really indemnity value income protection these days. Other things to be mindful of, sometimes there can be offset clauses, such as if you're receiving work cover to replace income, that typically the insurers are not going to put you in a position where your overall post-disability income is higher than your pre-disability income. So, there's a bit of a hygiene check that happens when you go to claim. But again, there's different policies that will and won't have offset clauses. So just got to, understand what you're entitled to and what your policy says. All right, we're at 7 o'clock, so let's jump through this. Other risks to consider with life insurance, and I'll talk a little bit more about insurance held in super. With insurance held in super, probably the key thing to remember is that from a tax perspective, the premiums that are paid for inside super are typically tax deductible to the trustee of the fund. Okay, so superannuation in accumulation phase is typically taxed at 15 cents in the dollar, so they'll give you a 15% tax deduction. They'll claim the premiums. If you pay for life insurance outside super, it's not deductible, and you've already paid tax on your personal earnings in order to then pay the premium. So it can be quite tax efficient to hold your life insurance inside super. However, like I said before, there's some trade-offs there around the TPD definition. So it requires really an analysis of whether you need that bespoke own occupation TPD definition outside super, or whether you're comfortable with any TPD inside super. It's not as big a deal as what it might sound like. I carry any occupation TPD. I'm quite comfortable with that quality in terms of my work history and the the cost and weighing up the benefits of those definitions. But some people really like that extra peace of mind of having their TPD definition just based on their, the litmus test of, are they disabled to the point they can't return to work in their own job? Look, and then when it comes to the claims side of things, with TPD and super, depending on your age at disability and the time frame to turning 65, there's a complex tax calculator, which I don't have the time to go into now, but there can be trade-offs with tax is probably the key takeaway with TPD inside super. And then also, as you get older, I mean, the taxation of life insurance on the way out of superannuation as a death benefit, if it's paid to a spouse or a dependent, tax-free. However, as you get older and if you get adult children and they're no longer financially dependent, got to be really careful with life insurance and super, particularly if you're using it as an estate planning type strategy, because adult kids can be taxed. So yeah, probably in terms of risks, broadly speaking, around personal insurance, the 101, keep up to date. Make sure you're reviewing those levels of cover at renewal. I typically advise my clients every 18 months to 2 years is typically a good, healthy, hygienic review time frame to review your financial position. Have you had a change in role? Have you had changes in debts? The kid's no longer dependent on you. Do you not need as much cover anymore? Making sure your income protection monthly benefit is keeping pace with your standard of living and your outgoings and whatnot. Increases in cover. So like I mentioned earlier, check that indexation factor at renewal. And then if you need further cover, seek advice, look at underwriting options. Just be cautious as well when you're getting rid of insurance, because sometimes you might cancel it and you can't get it back because your health's changed. Okay. Other things to be aware of: non-disclosure and misrepresentation. When you make an application to a life insurer, you're entering into a legally binding contract. When they accept it, they're accepting on the basis of the disclosures, and they'll ask you a series of questions. It's really important to answer those honestly and in full, because you don't want issues at claim time, right? Last thing you want if you've got a major health issue is a dispute over whether you told the insurer everything when you took the cover out. So what I do with clients, I go through a bit of a pre-assessment process where it's almost like you're seeking out financial advice or life insurance advice, but you end up filling in like a doctor's chart almost on the way in. And that's my job, is to understand, is there anything in your health history that might mean that you can't get the cover? So typically life insurers, once you get to 3 or more different risks that they would either charge a loading for, which is a loading is where they'll charge you more premiums compared to a standard life insured. But yeah, once they're charging loadings and then maybe excluding a few areas of the body, if you get 3 or more of those, they'll typically just decline the cover, because the quality becomes diluted if they're excluding too many things or they're charging too much. So yeah, just be mindful around your disclosures, telling the truth, get an advisor who can pre-screen the market for you based on how you present in terms of your overall risk profile. Other things that you should be mindful of: life insurance goes hand in hand with your estate planning. And like I've mentioned before, there's pros and cons to insurance held within super in terms of how you do or don't want it to be paid out. Some people will pay it directly to beneficiaries. Some will pay it into their estate. You can nominate it to be paid 100% to your legal personal representative, which is the executor of your will. And there, yeah, like I said, there's pros and cons. And I've mentioned earlier about the taxation risk to dependents and non-dependents. So look, that's probably in terms of the baseline amount of content. We're at 7:05. The QENDO team kindly went around the office and went to some of the community within the QENDO community and said, what are the top 5 questions on endometriosis and life insurance we'd like to throw at Andrew? And so these were the 5 that they come up with. First one: can endometriosis as a pre-existing condition still be covered by income protection insurance? Classic lawyer answer, and I apologize. It depends. It's because it depends how the cover is held, or how you have obtained it. Was it group insurance? Was it retail underwritten cover? Was it direct cover? If the cover is automatically secured without a medical assessment or disclosure requirements, for example, via a group policy or through when you join a new superannuation fund or change employers, you very well may have coverage for endometriosis or other pre-existing conditions, or it might start after a elapsed period of time like 6 or 12 months. Okay. Or if, however, you seek retail underwritten cover, then the insurers, like I mentioned earlier, they'll ask for your health-related background, and they'll make health-related judgments on your diagnosis, prognosis, and the effectiveness of the interventions that you've taken or are taking, and that informs their evidence-informed decision making. So you've got that duty to take reasonable care not to make a misrepresentation when you're answering questions to a life insurer. So that'll be across your age, gender, occupation, hours worked, smoker status, substance use history, your family history, your pursuits and pastime factors. So, if you're an abalone diver off of Western Australia, you're going deep underwater, they're probably going to decline certain covers or charge you more because it's a lot higher risk of certain events occurring. Similarly speaking, if you're going into overseas jurisdictions that might represent a higher risk of civil unrest, they might put a war on terrorism or civil unrest exclusion on the policy. But look, broadly speaking, an insurer will determine when you make an application if you've got endometriosis, they'll either accept your application on standard rates and terms for income protection and the other covers that I spoke about, so death, TPD, trauma, which is really what we want. We'd love standard rates and terms. Or they'll accept it with an exclusion, whether it's for endometriosis or for another part of your health history, or they might accept it with a loading. So you get full cover, but you pay a bit more, or they can decline cover. Probably the key thing to remember, though, in relation to this first question is, look, exclusions and loadings and declines are reviewable over time. So if you might present with, history at X point in time, but you had 5 years, you're really, you've got your endo under control, or, you don't have mental health symptomology that can often come with endometriosis. It can obviously be quite distressing from an anxiety and depression point of view, but comorbidities with endometriosis are very, very common, as we all know. So those factors are taken in legitimately into account by the life insurers as to whether, endo as a pre-existing condition and its comorbidities, will either be excluded or accepted as a risk. Okay, so apologies, it's a it depends answer, but legitimately that is the truth. Second question, what stage of endometriosis, if any, could prevent you from being able to obtain life insurance? So look, there's no cut and dry rule when it comes to endo and insurance, as each person's experience with the disease and its symptomology are just so different. Okay, so each insurer will have different medical underwriting guidelines. So there's these global behemoth reinsurers that really dictate the guidelines to the retail providers that distribute the covers. My general view is, depending on your method of diagnosis, what complications you've had, so whether you've had bowel adhesions, involvement of the urinary bladder, lungs, or your intestine, infertility, anemia, or menstrual irregularities, those are going to be really determinative of whether, from a staging and severity point of view, whether it's going to impact the assessment of your cover. And then also whether you've had a hysterectomy or multiple surgeries. Like I mentioned before, what comorbidities and other factors are associated with your endo are really, really important. Broadly speaking, stage 4 makes it harder to get. And, stage 4 endo is covered as a partial trauma condition with 3 of those providers. So that's important to keep in mind. But like I said, if you haven't been able to get cover before, insurer guidelines change all the time. So it's just worth shopping around and ascertaining whether you can get cover. Third question, what people with endo, pelvic pain, and health conditions should know about their insurances, the questions to ask, and clauses to look out for. Okay, probably the key thing is read your documents. What is the cover that you've got? Is it life cover, TPD cover, trauma, or income protection, or is it a bit of a bundled package with elements of many of these? terms and conditions, understand what the sum insured is, when the policy will pay out, look at your waiting periods, look at those benefit periods, and look at those disablement definitions that I alluded to earlier. Ad nauseum, I've said it, read your policy documents, read your PDS and your policy schedules. They're vital. Keep them safe, keep them with your will and power of attorney. Other things, check your beneficiary nominations if you were to pass away. If you hold your life insurance inside superannuation and you haven't done a beneficiary nomination, the trustee can exercise discretion as to where it's paid. So, if you want your testamentary wishes and objectives to be respected and you don't want risk of disputes by potential beneficiaries, we'll make that nomination to the trustee of the fund. And then depending on whether it's binding or non-binding nomination, they're either going to be bound to pay it the way you've said, or they've got to take in your wishes in exercising their discretion. Exclusions, read the sections around when the policy won't pay. So look at your product disclosure statement, understand whether it excludes pre-existing conditions to determine if they apply to your endometriosis situation. Understand the costs and tax consequences of holding that cover inside or outside super. And like I said, don't rush to move or cancel cover, especially if you go to roll over your super between accounts, because rolling over and closing an account can cancel your insurance. So it's important you ascertain whether you can get cover in your new fund before you roll it out. A strategy I often deploy for clients that can't get new cover is, and if they want to have a second superannuation fund because it offers other features, benefits, investment menu, or maybe going to a self-managed super fund where they want to buy property and blah, blah, blah. Well, sometimes you run a two-fund strategy. You roll the majority of the funds over to the new fund, but you always keep a small nest egg in the old super account to keep paying the insurance because you can't get it in the new fund. So there's different ways, strategy-wise, you can look at that from a, what's in your best interest point of view. So yeah, just exercise caution is probably my advice there. Next question, what questions should we be asking our prospective health insurance providers to make sure we get the most coverage possible for surgery, physio, and other expenses? So a bit of a disclaimer at the outset, financial planners can't actually give advice on private health insurance. So, but through my research and other things, I do take a serious interest in this space. So I'm just going to give you an answer broadly. First of all, there's a really good website, privatehealth.gov.au, and some of the materials, which I'm actually not showing here, but QENDO and Endo will be hosting some of the content I've prepared. It's about a 7-pager that you can download and read. I think Endo will be uploading it in towards the end of December. And so there's some content in there around private health insurance you can have a read about. But with, pardon me, private health insurance is totally different to life insurance. I mentioned earlier, life insurers can discriminate. Private health insurers is totally different. It's what's called universal acceptance. Anyone who wants it can get it, right? And then it's just a matter of whether you then bronze, silver, gold, platinum, whatever it is, in terms of the quality and how much you want to pay. Probably the key things, though, with endometriosis that I encourage clients to look at is, obviously, there's a tax benefit typically to holding private health insurance depending on your level of income and, otherwise not paying that Medicare levy surcharge if you don't hold cover for you, spouse and dependents. So there's that tax aspect around the importance of it in and of itself. But then obviously, with endometriosis, it can be so personalized that you want to be able to choose your surgeon. They might have advanced training in, pelvic ultrasound as well as gynecological care, and you might want to choose your surgeon. So my view is, you really want to, the key things to ask and check on your policy in the context of endo is, what's the level of gynecology coverage? What's the excess amount if you need to go to hospital? So obviously higher excess is lower premium, lower excess is higher premium. Look at your gap costs, ring up those doctors, get on the phone and ask about what are the gaps. Check if there's any extra costs for things like anesthesia. understand whether you're at that bronze, silver, gold level in terms of the rating of your policy. It's a bit of a general, flashing light type signal as to generalizing, medium, high quality, and features and benefits and whatnot. So pharmaceutical limits, often non-pharmaceutical or non-PBS medications are required for endo. So high pharmacy extra sublimits can be really handy, including for things like medical cannabis, which is not on the PBS. And obviously look for things like physio and other extra limits. Last question, any recommendations on finding a financial planner who understands disability? ClaimRight is a group down in Melbourne who I think do some great work as specialists in disability claims generally. But my view would be any member of the Financial Advice Association. So if you go on, so the FAAA, they've got a really cool Find a Planner tool. That's a really good starting point. So I'd use that as a start point in terms of finding a planner. Other things, like I mentioned earlier, really important that you have your estate planning understood. People automatically think, oh, I don't have a will, but when it comes to endometriosis and care, I think, if you're in a state where you're incapacitated and you want to be able to have a trusted loved one or friend help you make medical and financial decisions on your behalf if you're not able, an enduring power of attorney or guardian is a really, really important document, along with an advanced health directive. And of course, having a valid will for when you pass away and your beneficiary nominations. Can't stress that enough. Insurance and estate planning go hand in hand. And obviously a lawyer should be preparing those documents for you. So look, those were the top 5 that I had. I thought I'd quickly spend a bit of time on what my contributions to endometriosis research is and what I'm doing in that space. So my first paper, top right, I did. So my thesis is around endometriosis and the endocannabinoid system and trying to optimize insurance medicine in a cannabinoid medicine context for Australian patients. So we know that it's hard to get cover if you've got endometriosis. It's even harder if you then have to disclose the use of medical cannabis to manage your symptomology, right? So, part of what I wanted to do was kind of break down some stereotypes and stigma within the life insurance sector. So, we increase the knowledge and awareness of endometriosis, but B, also around the use of cannabinoids. And so my first author paper, top right, which I had the pleasure of co-authoring with Professor Abbott, Associate Professor Armour, Dr. Duffy and Justin. Anyone that knows endometriosis in Australia knows of Professor Abbott's history and the amazing work he's done for the community. But so, to get that published, we were able to show that, Australians with endometriosis are consuming THC predominant cannabinoid preparations. THC is the psychotropic component that has such important roles in pain management, which is obviously really critical for endo. But the thing that jumped out at me was significant out-of-pocket costs to access a GP, often not covered by Medicare, and then obviously limited financial reimbursement from private health insurance on the cost of cannabis scripts. Cannabis is not on the PBS. So, our team, our research, we're doing some randomized controlled trials. We want to improve the evidence base so that we can get a low-cost medication one day. Maybe it's a pipe dream on the PBS for women with endo and those assigned female at birth. Another paper I was privileged to co-author on, and that was in Nature Drugs, place of cannabinoids in the treatment of gynecological pain. So a great paper. You guys are the first to get a sneak peek at my next paper, which is what I've called on the left-hand side of the screen here, damned if you do, damned if you don't. So it's around misrepresentations and fraudulent non-disclosure by endo patients, who use cannabinoids when they've gone to get insurance. So when I did the survey that was part of the data on the cost and access paper at top right, we delved into questions of the respondents. There's 192 women in Australia that responded to the survey, and there was quite a reasonable amount that didn't disclose the use of cannabinoids. And the irony is that, you know, in those that did, it improved their capacity to work, it improved their sleep quality, you know, improved their ability to do the activities of daily living, and improved appetite and mood. So, you know, that's part of the reason why I titled it "Damned If You Do, Damned If You Don't," because, you know, if you do take cannabinoids and disclose it, well, you might be subject to adverse discrimination. If you don't disclose it and then they discover an issue at claim time, and it might actually be not a huge issue, they can still make it a real fight. And I want to stress, like, 99% of my claims are approved. I don't really have conjecture at claim time. So if you do the work at the front end, you must less likely to have issues at claim time. But from my perspective, it's a real human rights issue. I think, you know, there's a section of the Disability Discrimination Act called Section 46, and we don't want insurers just relying on their ability to arbitrarily discriminate without a reasonable basis. And so trying to do this research and build evidence for the use of cannabinoids in endometriosis is important, because we kind of want insurers to understand that, look, if this was a high blood pressure, you're taking a blood pressure medication and you're normalized, you're not charged anything extra, or you're not excluded. So if you have endometriosis, you take cannabinoids and it actually improves your capacity to work and enjoy life, well, you shouldn't be discriminated against for that. And so that's the messaging behind that, behind the research. It's a 10,000 word beast. Keep an eye out for it. We've submitted it to a prominent law journal. Hopefully it'll get approved after peer review, but it's only just gone in, so it'll probably be sometime in 2025. That's probably all I had to chat about, Jess and Ash. Let's open it up to some Q&A and general feedback.
Fabulous. Thank you so much, Andrew. It's so much information. And
Yeah.
as someone who has recently gone through review of my insurance, it just boggles your mind, honestly. So it was really great to have a breakdown of what it all means. We have some questions that have come through. I'll give people some time if anyone else would also like to put in through the Q&A. So that is now
Yeah.
open. Feel free to type in. Some of the questions that I've received while you were chatting were, at what age should someone look at insurance, or is it when they start to get a job, or when should they actually, you know, they might have been living at home with family, they might be under 18 with endo.
Yep.
What does that look like?
This is an awesome question. I got a little strategy. You can actually have child cover on adult policies, and I think this is a really novel way to actually improve the coverage for women and those assigned female at birth on adult policies, right? So even if mum or dad can't get, well, let's say mum and dad have cover, or mum has cover, but it's an exclusion for endometriosis. What I've found is that you know, you can generally, from the age of 2 to age, you know, 16 to 18, depending on the product issuer, you can take out children's trauma cover. And what can happen then is when they turn adult, they can flick their children's cover into an adult policy without underwriting. So my answer to the question is, the earlier the better. Kids cover, cheap as chips. Doesn't cost anything compared to like what adults. And it tends to be more pass fail. The underwriting isn't as intense as an adult. But look, I've had some really sad cases where I've had, you know, a gent who had bowel cancer before the age of 50, and you know, we had kids that were able to get cover because they were older, and we took that out before he was diagnosed. And then we had a little one who, you know, came along after dad, and got diagnosed and wasn't eligible. So can have a mixed bag of outcomes, but my general view is the earlier the better. And then mum and dad might even be able to chip in and pay for the cover if you're still living at home. But philosophically, the whole point is get cover early. That way, you're less likely to have had as many ailments and therefore underwriting issues. Yeah, try to get child cover, and then if not, as early as possible.
Yeah, it's certainly one we often hear around with private health insurance. So people have often been on their parents' private health
Yeah,
insurance, and then they're hit that age, or they're out in the big bad world, and they're just it's shocking, some of the costs in terms of private health, and so it's
it
quite
is. Yeah,
significant. And then people have certainly gone on to think, well, what am I doing with insurance and TPD and trauma cover? So it's certainly a conversation that's happening in the community.
yep,
Another question that I have come through is, some people are required to have, well, you're required to have some type of insurance with your mortgage when you take out a mortgage.
mm,
And some people through that process have just an automated insurance applied through that process.
yep,
Um, and so then they might also have one under their super, or then they thought, oh, actually, I don't have any insurance, so I better get insurance. And then they've got a
yeah,
third cover.
yep.
What does someone do? How does someone navigate that? We almost need an insurance doula or something, to that element.
There's a few things that jump out at me there. So first of all, um, and you can have multiple policies. There's no issues with that, provided if you are asked that you disclose other existing cover that's held in the sector. So that's one issue. Um, the other issue is the type, banks used to issue a lot of consumer credit insurance, which is really what the type of cover is there that's linked to either a personal loan or a home loan. It tends to be automatic acceptance cover or very limited underwriting. Therefore, very much read the fine print closely around the exclusion of pre-existing conditions, because you will find that that is often the case. All of those covers will also be outside superannuation, so you don't really have much tax efficiency in those covers. Um, but look, it comes down to your circumstances and what the policies do. If you've got three covers, or if you've accumulated three super funds and therefore three covers, it's common. We see it all the time. It's just really a matter of what I do is I do a needs analysis for my clients, where I understand, okay, what do we need up front from a capital perspective to pay down debts, meet some medical costs, fund the kids' education, and then what are we going to need from an ongoing income point of view, based on life expectancy and the overall balance sheet, because some people can self-insure where they're wealthy and they don't need insurance. So you kind of need to strike a balance between what's insurance versus what other assets you'd use in the event of something happening. So yeah, look, it's really just a matter of understand your overall needs, what the covers actually are, and then work out, rationalizing, is it in your best interest to retain or dispose of certain contracts depending on the restrictions or exclusions or the breadth of the coverage and the events, including, is it just death, TPD and income protection? Is there any trauma and that kind of thing? But also, you shouldn't be forced to take out any type of insurance by your lender or bank. And therefore, if you are subject to certain sales techniques that can happen with certain types of institutions, then understand your rights. There's some really good consumer law centers around the place that if you are ever the victim of, uh, you know, unscrupulous behavior by financial services providers, then you've got forums to go to. Often the best course of action, the lowest course of action, is to go back to the product issuer, raise any complaints that you might have with them. If you're not satisfied, then go to AFCA, the Australian Financial Complaints Authority, who can help you navigate that space. If I've kind of pivoted off to a negative rabbit hole there, but I'm big on
That's okay.
consumer empowerment.
That's right. And it's totally, when you're in that process, particularly of buying a home, whether it be a first or second, there is so much to consider. And,
There are, yeah,
I remember personally when we went through that process, we were just signing documents here, there, and left, right, and center. I
you just
think
want
my
the house.
signature, we just want the house, after 65 documents of me just
Yeah,
scribbling, I didn't know what my signature was at the end.
yeah,
And then to actually consider hold on a minute, we need to think about life insurance, TPD, all of those things. It's so overwhelming. And, we live with
Yep.
Endo and we're managing all of that. So it's also, my second question was going to be, how do you actually calculate what that cover should be?
Uh,
So that was an excellent example of thinking about what are your bills? What have
yep.
we got potentially coming up? And
Yep.
how do we get through?
Yeah, 100%. And that's it. Really, yeah, it's a good old fashioned needs analysis. We've got some sophisticated calculators that we use that use present value calculations and interest rate assumptions around, what you'd earn and stuff like that. Because the whole idea is you want to try to minimize how much cover that you need and just keep yourself in the same position if the worst case does happen. Mm.
Excellent. Well, thank you so much again. This has been recorded, this particular webinar, and it'll be added to our library. And we know that so many people find so much value in this type of content when they come across it. So a massive thanks to you, Andrew. Thank you for your contributions. You have a laundry list of different parts of the world you've been working in. So thank you for bringing your energy to the endo space. There's
All
so much
good.
advocacy that needs to happen, particularly around insurances and shifting some of those systems. So yes, thank you so much.
That's a pleasure. Thank you for hosting me. And yeah, feel free to reach out if anyone needs some advice or help on things. Good
Excellent.
stuff.
Thank you all. Talk to you soon. Bye.